Can you hear me now? Can you hear me now? All
Yeah.
right.
Yes.
Sorry, guys. No, I was saying, I'm glad to have you guys on, and today we're going to be diving deep into credit builders and trade lines, right? It's an exciting topic for a lot of you who've already fixed your credit or are on the journey of fixing their credit, and they want to just learn more about how they could build their credit as well. This is very important for the simple fact that when you're doing credit repair, people think that once you fix your credit, it's done. There's two steps when it comes to credit repair. You have to basically clean your credit and then build. And the reason why is because if you think about your credit report, right? When you were 18 years old and you had just gotten your credit, you had a pretty good credit score, right? But chances of you actually getting approved for something, it's slim to none for the simple fact that you don't have any history to show the banks, and the banks can't actually tell if you're responsible. So what do you do in that case, right? So as an 18-year-old, right, a lot of parents or a lot of siblings have taken the opportunity to add their family members or siblings or their children as authorized users, right? And how many of you guys are familiar with authorized users?
I am.
Absolutely, yes. So authorized users are the secret to actually just boosting your and giving you a little bit of rapport when it comes to history, right? Outside of that, you have what's called primary trade lines. So there's two things that you can use to build your credit. The first one we're going to get into
This
are
is a new thing I'm a part of.
primary trade lines, right? Because the primary trade lines are basically the ones that we are going to be leveraging to get the high capital in the end of the day, right? That's what the banks look at, and they're going to give you the most capital based off of primary. When you're going for the actual authorized user trade lines, those are just mainly there to boost your credit, give you some age and assist in giving you more leverage as far as history on your credit profile. But the main goal is to have more primaries, right? And we're going to dive deep into the exact primaries that not only I've leveraged, but I've helped hundreds of clients leverage over the past couple of years to build their credit in the most affordable and most effective way. And some of these will be diving into some um, quick short-term solutions that'll help really add an extra 30 to 40. Sometimes I've seen 50 points on people's credit reports in just a matter of 30 days, right? So these are very valuable tools and resources to have. And all of this is located right in the beginning of the campus, right in the credit campus. So I've put together a very detailed list of trade lines that are primaries that you guys can use and start leveraging if you're very new to credit, or if you've just gone through a credit wipe and you've deleted a lot of old negative accounts that did have history that were actually helping your credit, but just had negative information. And you now need to start adding additional primaries, right? Because if you were to go to a bank at this very moment and you have, let's say, two primary trade lines and they're roughly a year or two old, and you want to get approved for, let's say, a, a business line of credit, but you don't quite have the age and the history, and you only have a couple trade lines, the chances of you getting a business line of credit are very low. When you apply for a personal credit card, with only two accounts and very little history, let's say around 1 to 2 years, you're not going to actually get very high limits. They're going to give you around what you currently have. So let's say, for example, right now, your highest credit card limit is $1,000, right? When you go apply for a credit card, they're going to give you something around $1,000. It could be even less, right? It just really depends on one, the bank, and it depends on the history and really like what you're applying for, right? Because the types of credit cards also impact that, right? So what I'm going to be teaching you guys today is how to leverage certain credit builders to start having higher limit accounts and higher limit primaries and installments on your credit report so that when you go and start applying for intro level credit cards or starting to build your profile with trade lines, you're using the most effective accounts because not a lot of people understand this part, right? I've helped hundreds of clients and I've had clients with 750 credit scores, 780 credit scores, guys getting denied for lines of credit. Why? Because they didn't have that much history and they didn't want to wait to build that history, right? They went through a credit sweep. A lot of their accounts were cleaned up because they were all negative, and they're now transitioning into what's called the building phase, right? That's the most underestimated phase. So, for those of you in the campus, I'm sure you've seen that a lot of you guys are getting results fast. So, because you're getting results so fast, you also want to implement a lot of this stuff just as fast for the simple fact that the further ahead you get of this, the easier it will be for you to achieve your goal because you're starting your credit repair journey and your building journey at the same time. So by the time you finish repairing your credit, you only have maybe a month or two to keep building before you can start going and getting business lines of credit and starting to apply for loans that will really help you when it comes to business or even from the personal side. So that being said, we're going to dive into specifically which trade lines are going to help you and which ones I recommend that I actually use. I use majority of these. I use about six. I use a five out of the six of these, and I've been using them for over a year now. So what I'm gonna do is I'm gonna dive deep into each and every one of them and how they're gonna benefit you, so that you guys can start to decide what you want to start now, and then start setting goals for yourself. Like, do I want to get into these trade lines in a month from now, or like it's all gonna be based off of your own goal. So if you're looking to get funding or apply for business lines of credit in the next 3 to 6 months, now would be ideal. But if you're looking to do it in the next 6 to 12 months, you can give it a few months to decide, or even a couple of months to decide which ones are going to work best for you. Second, it'll give you the opportunity to go through and determine the costs of each service, right? Now, as you can see, they're not very expensive, right? This is literally a Netflix subscription. I know some of you can sacrifice Netflix subscription if necessary to start building your credit because that's what's most important, right? But you're literally getting things on your credit report for a very affordable price, and I'm gonna start diving into them, right? So Ava is actually pretty popular, right? So if you basically were to go to ava.com, right? This is how it looks, right? What they do is Ava basically gives you a credit card. It's like a credit card, but you don't actually have access to this credit card. What you do, they give you a virtual credit card once you sign up with them, right? So when you pull them, they don't actually pull an inquiry. So there's no inquiry. Um, and they approve you for a limit, right? And there's a very specific limit that they approve you for based off of your current situation. So, for example, I got approved for an $1,800 line of credit, right? They can approve you all the way up to 2,500. That's the max they can give you, right? And that's what it shows here. You can build up to $2,500 with available credit. So what they do is they basically give you this card, right? You sign up with them, they're gonna give you this card, and you can use it for. They work with partnerships, right? They have partnership companies that you can leverage subscriptions through. So let's say, for example, you have Netflix, right? You can use this card number right here to pay your Netflix bill every month, right? And then your Netflix bill will reflect here as at $9 a month. Now you're gonna pay Netflix through Ava, and then now you're getting credit for building. You're getting credit for making the payment, and now you're building credit at the same time while you're still watching Netflix, right? Because if you're just paying your Netflix account with your card, you're not getting any benefit from it, right? So this is why this is so valuable, right? And you want to set these type of apps up on auto pay for the simple fact that you don't have to worry about it, right? I have all of mine on auto pay. So the benefit of having Ava is one, it's very affordable. It's only $10 a month, and you can get up to an $2,500 line of credit, which is huge. So If you guys are new to the credit space, if you're just getting started with all of this stuff, if you have like $1,000, $2,000 limit credit cards, right? If you are only limited to that, and I'm sure you guys, as you go through the campus, I've shared with you that utilization is a huge factor, right? It's 30% of your score. So if you use your credit balance, you can drop as much as 168 points, guys, just maxing out your cards. So what is a card like this gonna do, right? It's gonna actually add to your available balance. So for example, if I have a credit card with $1,000 and I get an Ava card, I get approved for $1,000 line of credit. Now I have 2,000 available. If I max out my credit card, my Ava balance is still at the $1,000. So I'm not at 100% usage anymore. I'm now at 50% because I use 50% of my total available balance. So that's where it's going to also benefit you. It's going to benefit you. It's going to help build your payment history. So it helps also going to help build your available limit for credit and your utilization. So you're getting three wins out of just simply signing up for this for $10 a month, right? It's a no-brainer, especially for those of you who have those, $1,000, $500, $1,500 credit cards, and you're like, man, like I would love to just like use this without hurting my credit. This is how you do that. You use these accounts. This is how you leverage them. And the more you have, the better it is for you. You can max out all your credit cards, the more trade lines you have, right? Because these primaries, again, they're adding additional credit limits to your profile. I got about 8,100 in just primary trade lines that I actually don't have access to, right? They're not like actual credit cards I could just go and use, right? I have about 8,100 based uh, I have 8,100 from Kickoff, Ava, Credit Strong, Credit AI. I have four different accounts that are revolving lines of credit, and then I have my installment with Credit Strong, right? So I got five accounts, five products, and between all of them, it's like 8,100 bucks. And so let's say I had $8,000 in credit cards, right, available. I can max all of it out and only hit 50% at max. But if I wasn't leveraging these accounts and I maxed it all out, not only my score tanking, right, I also have to pay all that money back because of my utilizations dropped, and you have to pay that balance down in order for your score to go back up. Doesn't matter how clean your credit is. If your usage is up, you're pretty much stuck with paying it, right? And there's only one solution to that, and that's getting these primaries. So basically, it gives you no hard inquiry and it reports within 30 days, guys. And it gives about 45 because it just never, you never know. But it's 30 days and it reports fairly quickly. I think it was about 18 days when mine reported. But Ava is pretty solid, right? You also have Credit Strong, right? Credit Strong is also pretty legit. And the reason I like Credit Strong is because it actually offers primaries and installments for the personal and the business side. Like you're looking to build your personal credit and your business credit, it offers products for everything. I'm gonna break down every single product they have, and you guys really decide which one makes the most sense for you, right? So in summary, right? I've listed all of the payment options that I recommend, right? Specifically here, but when we get on the website, I'm going to show you all the additional ones they have, right? The ones I have listed here are the ones I'm currently using, right? For the simple fact that these accounts are very effective and I've seen a lot of benefit from them, right? And I'm only recommending anything that I've tried, right? So you've got an installment account for $30 a month, right? They'll give you $2,000, right, as an installment. So it will look like you have a personal loan on your credit report. And the benefit of having an installment, right, is so that you have what's called an additional product for your credit mix, right? Your credit mix is basically the variety of accounts that you have on your credit. When you go into the banks, they don't want to look at your credit and see that you have only your credit cards, right? You want to show them that you have an auto loan, some type of personal loan, a credit card, and you have a mix because it's showing that you can handle a variety and you can handle a large amount of debt. That's what they basically want to see, right? That you're capable of managing debt. And having an installment plus the revolving account, right? You're adding the mix plus you're pretty much giving yourself an opportunity to diversify your portfolio. So there are several different ones you could use. There's the installment account where it's $28 a month. They report up to 1,000 um, on your credit. And two, it's a savings account. So after 48 months, you basically get all that money back. So think of it as like you're saving for, the next 2 years, and you don't get to actually touch the money until you decide to close the account down with them, right? But it's a savings account. So if you want to deal with it in the form of savings, more than welcome to do that. If you're looking for more of like a short term, then I would recommend going with this product, right? You basically would be able to cancel anytime and you're not making any commitments for the savings plans. You cancel anytime. You could do it for 4 months or you do it for 1 month. I always recommend to do it longer because, again, that's how you're going to build the payment history, right? You want to build the payment history so that you can get the credit for it. But they give you up to 2,000. And then this is actually one of my favorite ones. I recommend this to a lot of clients. They usually get an average of like 20 to 50 point increase with this guy. Because what happens, you pay one time $100 and they'll give you $1,000 line of credit. And then every month, right, it's just going to report on time. You're not even making any more payments. It's a one-time payment. And that's what I like about this account. It's the one-time payment revolving account for $1,000. Now I wish it was, I wish they had an opportunity to pay like, three, 400 and you get, 3,000, 2,000. But that's for a little bit different, right? That you get a little bit more of that on the business side. But when we're talking more about personal, this is a really good product to use when you're building your credit because you're simply going to get the benefit off of this, and it's going to help boost your credit profile and give you more leverage, especially when it's time to apply for loans, and especially when you want to actually use your current credit cards and max your limits. That's where these are going to come in handy. So when I go to Credit Strong, right, I'm going to show you all the products, right? So these are all the products they have. They have the Magnum, right? It allows you to report anywhere from 2,000 to 30,000 of installment credit history. And then what I mean by 30,000 is you can actually add you can actually build it using savings, right? Or products. And what I mean by products is they have options for you to go in and apply for or deposit certain payments each month, like an X amount of money each month. And what it's going to do, it's going to help increase your limit. So if you submit payments each month and you up your payments, your actual installment amount starts to grow, right? It's almost like a actual credit card where if you were to get a credit card and you're using it, paying it on time, each month you're paying it on time, you get access to more limits. It's very similar here, right? So, and it's also the same goes for this one, right? You start with 1,000 and you get up to 3,000, but you have to make a monthly payment every single month, right? So, for example, you could set your monthly payment to $60 a month, and basically what you're doing is you're depositing that amount into it as a payment. You're also giving yourself an opportunity to raise your limit. Or you could just pay the $99 and just leave it at that and not have to worry about paying anymore, but you're going to be limited to $1,000 as your highest revolving limit. This particular one is an installment. This one's revolving. Personally, I have all three, right? I have all three, but these are the first two I started with, and I found them really helpful. This one I saw the fastest results with. This one, it took a little bit more time to boost my score for the simple fact that it was month to month. This one just like it was automatic. Like the very next month after it reported, like I saw my results. And that's why I like that one. So if you got $100 laying around, it's a really good one to use. We've also got the business side of this. Business is like we're talking about 5 to 10x more for your business lines of credit, but you're also going to be paying 5 to 10x more when it comes to the monthly payments, right? And I'm going to show you why. So you've got like the beginners credit builders where you can get in with a one-time fee of 350 and the monthly payment's 200, but they're going to report 5K. Guys, a 5K trade line on your business can get you up to 40 to 50K alone, right? Because every time you add primaries to your account, you're giving yourself and you're giving the banks an opportunity to see that you're capable of managing large amounts. But the more you go and the higher you go, the higher limits you get. Like the people who are investing in this for their business are getting no less than 100K to start when they're applying for business lines of credit. For the simple fact that they already have established trade lines on their credit and it's giving them that portfolio that banks are looking for. So these are really cool tools, and they're tools that you guys can start planning and strategizing for if you're looking to get to this, right? You want to get to those high limit approvals for business credit cards and business lines of credit. These are good ones to use. And then you have the more um, the this one's for 50 months, right? So you got 50-month business credit building accounts, and they give you the same amount anywhere from 5,000 all the way up to 50,000, right? So there's really quite a number of opportunities you guys can leverage this for, but I wanted to show you Credit Strong is pretty cool and it's more favorable if you're looking to build business credit and personal at the same time because I offer both. Ava doesn't offer that, right? So that's the difference between Ava and Credit Strong. Credit Strong has more products, more services, and a variety of different options. It's a little bit more pricey, but they give you more services. And then Ava is more on the affordable side where you don't have to really worry about, the $10 monthly service fee because in the end, you're getting a positive trade line reporting on your credit report. And we also got Self. So Self is also a very popular one, right? And if you guys are on the campus and you click the link, it'll take you right there. All of these links are clickable. You click on them and it'll get you started. But to give you an idea how Self works, it's pretty similar to Ava. This one has the option to basically make monthly payments, and your monthly payments get saved, right? So it's also another savings account, right? So you got no hard pulls, right? There's no hard pull on your credit when applying for a self credit builder account. It's automated payments. You guys have to worry about tracking it. And that's what I always recommend when you doing credit builders, guys. Just set it up on an account. It's always going to be paid on time, and you don't have to think about it, right? You'll be able to track your score, and it reports to all three bureaus, guys, right? You cancel at any time. That's the cool thing about these, right? So it's like a building, you're building a savings while getting credit for it, right? And it's 25 bucks a month. So self is pretty cool. Now I'm gonna get to the best one, right? You have self rent reporting. This one's actually for those of you who pay rent every month, right? If you're someone who's actually stuck right now and you're like, man, like I got to build my credit ASAP and I need age, right? If you've been paying your rent every single month and it comes out of your bank account, it has to come out of your bank account, guys, right? Because what you're gonna do is I believe it hooks up to what's the Plaid or Plaid. Correct me if I'm wrong, but it's like the Plaid app where it's bank to bank and it looks at your transaction and you basically pick the one that is your rent payment. So if your rent payment is 700 bucks a month, then you would connect the Plaid and you would click on the $700 a month account and it would basically report that every month for you as a positive credit payment account, right? Now you're getting credit for paying your rent without having to apply for a credit card, without having to pay any extra money. You don't need any subscriptions. And the best part about this is you can backdate it. You can go all the way as far as 2 years back, guys. That's the key here. You're going all the way back. I believe it's like extra 30 bucks a month. Let me make sure it didn't change. All right, extra 30 bucks a month. Score. Where did I find this thing? Rent and bills. Ah, there we go. Let me just put this in and see where it take me. Crap. It's making me go through this step by step. I'm just gonna explain it to you guys. It's easier. But you get to actually add your bills too, guys. If you have electric bills and you have water bills and stuff, you can actually add that to this as well. Rent and bills. There's a couple other companies that also offer that service, guys, and like there it's companies like Stellarfy. Um, Stellarfy is one that actually offers like utilities, like you can pay on utilities, but some they're not as like reliable. And there's Boom Pay. Boom Pay is also another one. Like I'm very familiar with a bunch of them, guys, but I'm recommending the ones I've had the best experiences with, right? Because you guys can search these up and find them out yourself. But for the most part, I've found that the ones I'm recommending, I've had the best experience and I've had the least amount of trouble with, right? They let you report your rent, bills, all kinds of things, right? And there's so many ones, there's so many different ones out there. I'm sticking to the ones that I'm like super cut and dry and like very easy to use and have multiple products you can work with based on your actual situation. So Rent Reporter is actually about like last I checked, it was 36 bucks a month. And again, what you do is you go in and you collect you basically connect it to Played and it would verify your rent. You basically can pick an amount on your account, right? It doesn't have to be actual rent, guys. This is a cool part. I don't know if you noticed, but CJ in the campus dropped he dropped some information on how you can leverage rent reporters for a specific amount. You just have to make sure that that amount is consistently coming out of your bank every month. So it doesn't have to be the full rent amount. Or if, let's say, for example, you've had some bills you know for sure consistently are coming out of your bank every month. You can connect it and leverage that to get credit for it. Because remember, the key is to build history and to build trade lines. If you have a couple trade lines with 1 to 2 years, versus having none, you're better off having the ones with 1 to 2 years. So backdating it is going to help you get there much faster. So self-rent reporting is very crucial and it gives you that leverage for literally no cost. What you will have to pay for is you want to get the backdating, then yeah, you pay for the backdating of the actual history. But to just get started like right now and start reporting things right now, you're not paying anything and there's no monthly fee. And that's the best part about this. But the savings plan, yeah, you'll pay the 25 bucks a month. It'll be saved for 12 months. And then at the end of the 12 months, you're going to get that full amount back. Then you got Kickoff, which I personally like Kickoff. I get the $35 a month program. It gives me $3,500 line of credit. Um, and it's pretty cool. There we go. All right. So yeah, so you see here you've got the $5 a month basic, right? Again, you guys can start with this at a very low cost. It's all based on your situation, the budget, etc. But also keep in mind that if you want more room to wiggle, you want more leverage, then you go for the more higher ticket items, right? So $3,500 trade line is pretty good, guys. Because remember what I was teaching you guys when it comes to getting access to business funding. If you want to get access to business funding, you need to meet a very minimum threshold, right? And the threshold is going to be anywhere from 5 to 10K in available lines of credit, right? And I list that here for you guys. You want at least 5 to 10K in available lines of credit, specifically in the revolving sector. And the reason why that's going to be very helpful and beneficial for you is for the simple fact that when you go and apply, they're looking at the amount you have available and they're going to actually prove you for more because you've been managing 5 to 10K worth of debt already, right? That's what they're looking at. Like, okay, this person's been managing 5 to 10K worth of debt. They have a little bit of history. I feel much better about giving them some access to capital, right? So this is a pretty good one to use. This is one I use personally, but if you're getting started, this one's bad. And neither is this one. If you're gonna go here, I'd rather just go here. All right, I'll just go hard. At the end of the day, because they actually have more features and they report to all three. This one only reports your Equifax report, right? It only reports your Equifax report. And when you use this feature, it also gives you rent reporting. right? You'll also get the rent reporting feature. It comes included with the 35 bucks a month. And that's also why I use it, right? Is because of all the features, and two, because of this actual limit. That's the ticket. The limit is the ticket. The next one is Grow Credit. Guys, this one's actually pretty cool. I like Grow Credit. I actually use it for all my subscriptions. Um, and when I mean all, I use it for like I have my Canva connected, right? They got Canva, SoundCloud I use. I have Spotify. What else am I using? I'm using YouTube. Yep, I got YouTube connected. Guys, I like literally all of my monthly like reoccurrings, most of them are showing up on Grow Credit. Most of them. So what ends up happening is my bill, instead of it coming out of my bank account, you're gonna get a credit card just like you did with Ava, right? Just like you did with Ava here, how Ava shows you this credit card. You're gonna get the same thing with Grow Credit. They're gonna give you a credit card in the app. Then you use that credit card number with the expiration and the CSV number to basically apply for or basically sign up for a subscription. So you'll pay through that card. So it gets charged through the card, and then at the end of each month, you pay the whole balance at once, right? So all your payments are getting paid in one place versus you having to manage it in separate places. And that's the benefit that Grow Credit gives, right? Grow Credit gives you this opportunity. Um, and it's very affordable. It's literally they give you an $1,800 line of credit. These are all
Oh, you mean like a plug? You need a cord. It's right here.
oh.
But is there? I think Jeff got this shit on there. Is there a hole down there you can plug it up in?
So what I was saying was these are the subscriptions that you can actually leverage, guys. I mean, DoorDash, Amazon, Kindle, guys, like majority of people's bills are here. You guys should be getting credit for making your monthly payments. Literally. I mean, your phone bills, premium subscriptions, like there's Geico in here, insurance, LinkedIn. I mean, the list goes on. There's so many guys. I mean, you even got credit repair services here like MyFICO, credit, right? Credit monitoring services, Experian. You guys have an Experian account and you're paying every month. You might as well get credit for it on your credit that they're gonna report. I'm showing you guys cheat codes that people don't think about every day. Not many people are thinking about their bills and what they're paying right now and how they can leverage it, right? And guys, the cool thing about Grow Credit too is you're going to get a statement at the end of the month for Grow Credit as well, right? You'll get a statement every month for Grow Credit, and you can actually request it online or you can have it mailed to you. And the statement can come in a form of a remittance bond, right? Security bond. And you can literally take all your bills instead of having them all in separate bucket, you can have them all getting basically charged to your Grow Credit, and you can basically endorse that document and send that over, right? So that's also another thing you could do with this. But in this particular case, you're basically leveraging everything people use. Like I guarantee you most of you guys have at least two accounts here. Right? I know I do. I got like six accounts here I'm using, right? So why not take advantage of this? So the cost of this is 10 bucks a month, guys. So it's a $10 service fee, right? It's a $10 service fee. So you're paying $10 every month to get all your bills reported and get credit for it. It's a cheat code. It's literally a cheat code. Then you got Credit AI. Credit AI is dope. I like Credit AI, right? Why? Because they give you like this thick silver card. Like any of you got an Amex card, they give you these thick silver cards, man. They're heavy too, right? These thick silver black cards, they're dope. And basically, it's a smart card, guys. And Credit AI basically, you basically add money to it. Like you'll put, let's say, $100 in it, and you can pay, you can use that $100 as your limit. They're gonna report 1,500 $1,500 line of credit to your report, but you'll use your $100 limit and you're gonna pay against that $100. So to better explain it, I'm gonna put $100 into the card, and then every month I'm making payments on that $100. It's almost like a secured card, but it allows you to build your credit. And because you put that $100, you can literally just make a minimum payment every month of like $10. Now you're getting payment on time payments every single month. And it's also reporting a $1,500 line of credit. Now, what you guys can do, you can load it with more money. Let's say, for example, you have a direct deposit. You could take your money and put it in the credit AI account. And every time you use it, you're paying it off. And that's going to allow you to build your credit. Right? It's almost like having literally having a credit card, but you're loading it to use it. It's almost like it's secured, but it's very different, guys. Right? This one's a little bit different. You don't have to go to the full extent with this particular card. Like I specifically just put $100 in it, and I've been paying $10 a month, forever on it. Like I don't even really use it. I just get credit for it. It's another $1,500 in my pocket or my credit report. Right? It looks good on my paper. Right? It looks good on my paper. So credit AI is pretty good. And then there's Boom Pay I was telling you about earlier. Boom Pay is pretty decent. This one also allows you to report rent, right? But they actually want you to offer a copy of your lease agreement with self-rent reporters. You don't have to. It's literally your bank account to bank account, right? This one they're going to see your personal account that you use to pay rent. And then it's $36 annual plus 25 to report last 24 months, right? So there's so many different tools, guys, that you guys can leverage, but these are like the top. I get the most value out of these, and they're very efficient and very useful for every single one of you who are looking to build your credit in the next 3 to 6 months or 6 to 12 months, right? The longer you have these, the more beneficial. The less you're gonna need to apply for credit cards. Ideally, these are like they're very beneficial for those of you who literally, like I said, just clean their credit and are looking to now build history, build age, and leverage things that you're not going to get approved for right now. Like when you clean your full credit report, you're not going to get approved for $1,000 line of credit. They're going to want you to get a secure card at first. And if it's not a secure card, like Capital One is going to be the one banks that the one of the few banks you're going to get a credit card for, right? I'm sure those of you who have a credit card model, you've seen the blue Capital One card. Like that's the number one starter card I've seen every client get, right? It's a $300 limit. Sometimes you'll get 500 on it, but it's like the starter card. It's a college kid card. A Discover offers that too as well. You got the Discover card where you can use a secure card for Discover, or it'll give you the entry level card, $500, right? And those are the cards that they're going to give you in the beginning. You're also going to get cards like Credit One, right? Credit One is one that's also pretty popular. Um, there's, I believe, a couple other banks. Like there's Mission credit card. They give you like $500, $300. Guys, they don't give you much, right? There's Premier Bank. I can list all the bottom tier banks, right? There's a tier three cards, right? You're not gonna get anything for those. There's tier three, tier two, and tier one. So in order for you to get the tier one cards, guys, you need to start building your stuff with this stuff. You gotta start building it with installments, primaries, right? These are called primaries. Guys, these accounts are more powerful than an authorized user. These accounts will get you approved for lines of credit before an authorized user does. Why? Because banks are being more specific now with authorized users. Authorized users are very beneficial when it comes to reporting things like age, right? Because you're going to get credit for the age, and not for nothing, some of us here, very young, some of us here have been in the game for, a couple decades, some have been here a few decades. It's like if you haven't been in the game for 50 years or 40 years, you're not going to have excellent credit. Why? Because it favors those who've aged. which is crazy if you think about it, right? So if you're a successful young entrepreneur in their early 30s, or you're in your mid 30s or late 40s, it's still going to be a little difficult for you to get excellent credit for the simple fact that age is still a factor. Age is still a factor. So what are authorized users used for? Is to add the age so it helps boost your profile. It's the one thing that you can add to your profile that they will consider, and it will also help your score instantly, right? But when it comes to actually looking at the legitimacy and to look at the history of your report and your profile, they're going to be going based off of primaries. Because again, they're reading authorized users and they're like, okay, well, we know like that's not his main account or her main account. They're working with it on someone, but someone else got approved for it and they're just benefit from it. Banks know this. So authorized users are a little bit different. And this is why I emphasize these primaries so much, for the simple fact that they're the cheat code. They're the cheat code when you go into business credit, and they're the cheat code when you go into personal credit. Right? These are just as valuable as getting your own personal credit cards. Absolutely. If you frozen your secondary bureaus, guys, absolutely you can build. It's a good question, Emmanuel. So if you freeze your secondary bureaus, you can still go out and apply for credit cards. You can still go and apply for certain things. Now, I'm going to tell you what that I've obviously learned over the years, right? If you go to a car dealership, or I've seen it more commonly with car dealerships, and your credit is good, it's not very good or excellent, they're pulling subprime lenders. Who here is familiar with what a subprime lender is? You guys could drop a comment in the chat, or unmute. Who knows what a subprime lender is? All right. Subprime lenders, guys, are literally bottom tier lenders. Yeah, Richard said vultures. Yeah, absolutely. Subprime lenders are the ones that are giving you literally like subprime lenders are payday loans. How many of you guys see payday loans in, poverty-driven neighborhoods and stuff? That's what you're looking at. You're looking at subprime lenders. And guess who pulls from subprime lenders, right? When your score is low, they start hitting subprime lenders. So to answer your question, Manuel, like if I have, let's say, a 650 credit score and I don't have much history, they're gonna pull subprime lenders. They're gonna pull subprime lenders, and then I'm gonna get like terrible interest rates, and my payment plans are gonna be through the roof. The dealership is probably gonna ask you for a down payment, just completely illegal, right? They're gonna do all kinds of stuff just to wreck you. They're gonna wreck you on a commitment, right? It's literally like a legal robbery. It's just robbing you in your face, right? So basically, when you go and apply for things and they're pulling subprime lenders, your secondary bureaus can't be frozen. But you're gonna know very quickly, because they're gonna tell you we can't pull any data on your credit. If your Equifax, TransUnion, and Experian are not frozen, but the rest are frozen, like your LexisNexis. So for those of you who are joining the call or new to the campus, I'm gonna share really quickly what these are. Right? It's accounts like, all right, you want to opt out, freeze, LexisNexis, right? LexisNexis, they house bankruptcies, judgments, and tax liens. Uh, and also payment history. That they've been known to house payment history as well. Innovis houses payment history, mortgage accounts, late payments. SageStream, auto lender information, credit cards, utilities, cell phone bills. ARS houses and collects consumers that are approved for bank accounts and declined for bank cards. Clarity services are payday loans, auto title, subprime lenders. So this is also another one. You freeze clarity services, they can't even pull subprime lender information on you. So you bring up a really good question because you they can actually tell you they can't pull your credit if they're trying to pull a subprime lender for your loan. If you got good credit, your Equifax, Experian, and TransUnion is not frozen, and you just don't have like the history, and they want to try to get the most out of you, they're gonna be pulling subprime lenders, right? Why? Because guess who they'd be pulling if they go directly to the big dogs, right? They're pulling straight from the bureaus. They go into the Chases, Bank of America's, Citizens, right? They're going to the big dogs. They're not dealing with subprime lenders. Subprime lenders are the ones that you don't want to be dealing with. So if you do freeze these and your credit is low and you need to get a loan from a subprime lender, yeah, you have to go back and unfreeze this. So that's a really good question you asked because, um, we've run into clients that have ran into this, right? They're on the car dealership and, they message us. They're like, yo, like they're telling me they can't pull my credit, but it's not frozen. And I'm just like, well, that's weird. I asked them, I was like, well, who are they pulling from? And they won't tell you. So I'm like, we go back to the client's credit file and we froze all of his secondary bureaus. And I'm like, they're trying to pull subprimes on you, bro, because that's the only other reason. They're going down to the bottom of the barrel.
That makes a lot of sense. It sounds like they would do that to avoid giving you the actual rates for your credit score. So they go to the bottom of the barrel to see if they can, oh yeah, your payment history isn't that good or this, that.
Exactly.
Okay, that makes a lot of
Exactly. So they're going right to the bottom of the barrel to get you because at the end of the day, they know that they're gonna make more money over time on those interest rates because they're just jacked. And they're gonna request a down payment because of that. They're gonna hit you with I need a down payment, which is crazy, right? That's like telling you go to a bank and you apply for a credit card, and then they're like, oh well, you got approved for a $3,000 credit card, but you need to put 3,000 down to get it. Like what? That's not a credit card, bro.
That makes so much sense, bro. I'm over here laughing because it got done to me a couple of times, and to hear this now, I know what was being done behind closed doors. You know,
Exactly. So we're gonna open you guys' perspective on how they're running plays in the matrix, right? That's how it works. They're leveraging every angle they could get to do this to you, right? And if it means that they're gonna be able to get you to sign the lowest and highest interest rates, then that's what they're gonna do. And what you guys also have to keep in mind is I read a lot of these contracts, right? I was studying truth in lending, and in the future we're going to be diving into truth in lending. But truth in lending, basically, it states that any like all the total of all of the accounts that you guys are being charged for in truth in lending are included in the sum, right, of the total, right? So the total amount and the total interest and the total amount financed, right, is included. But what they do is they go back and they tell you that you got approved for a $5,000 loan. They're going to go ahead and tell you that you have to now pay back that 5,000 even though you were approved for it. Instead of you actually getting the car and then just leaving and then discharging it. And then also when you think about when you go and get a house, for example, if you go and apply for a mortgage and you get approved for $250,000, what's supposed to happen is you're supposed to get the full 250,000. So if I go apply for a house, I get approved 250,000. That 250,000 should be in my bank. Like it should be in my bank. I got approved for it. Then you use that 250,000 to buy the house. You use that 250 to buy the house because you got to prove you got that credit. The credit's yours. But what they do is they don't actually give you that credit to buy the house. They instead keep it in the bank, and then they tell you, oh, you get to keep the house, just pay this every month. But you have to pay this to us every month. So technically, they never gave you the credit you were approved for to begin with. And that's what's happening at car dealerships and so forth. When they ask you for things like down payments, it's like all of it's credit. They double dip with everything. They double dip with everything. And that's why when it comes to mortgages and all this stuff, and we'll dive deeper into this stuff as we go into the weeks, we are literally getting charged from everything twice, from the bills to car notes to mortgages, all of that stuff. We're getting charged twice because we are the original creditors and we're giving them collateral, right? They're literally like they're collecting Federal Reserve notes and then they're taking your instruments. Remember, for those of you who've been studying the remittance class, they're taking those instruments and they're claiming them. They're still getting those credits, guys. And then after 3 years of you not claiming them, they keep them. So you guys can go back 3 years and claim those credits. You just have to pull your IRS tax transcripts, right? And I could teach you guys that in a later class. I'm working on the tax stuff right now, but I don't want to teach you things that I haven't completed, right? So I'm working on all that tax stuff right now. I'm mastering the taxes, but what I know right now is when let's say if you went and you got approved for a car, right? And you paid it off. And you paid it off a year ago. And then it's on your tax transcripts now, right? As a paid car. Or if let's say you got your car was charged off and then it got reported on a 1099-C, you can pull it on your tax transcript. And then you can go back on that tax transcript and claim those credits. But in order to claim those credits, you got to go through all the trust stuff. You got to have a trust, you got to have all that stuff set up, right? Which I teach you guys. But at the end of the day, understanding that these companies are double dipping. So when they're trying to go after subprime lenders, so they get the highest interest rates on you, is because at the end of the day, they're the ones that are going to be collecting the money on the interest because that's how they get paid. They get paid on interest. Now, I'm going to explain to you one of the reasons why a lot of these banks, when they basically go and get the credit from the treasury when you apply, is would they tell you they're not approving you for credit? It's because they know because of your situation, this is why we're doing this credit stuff, guys, right? And as I talk about credit building and talk about approvals and denials, I'm going to give you the big picture, right? The reason why we're going through all these matrix steps, right? I'm teaching you guys the best game in the matrix because you have to learn how to maneuver through the matrix, guys. You got to be good in the matrix and out of the matrix. That's how you operate at the highest level because you're operating with awareness. You're conscious about the situation and you know how to handle business in the matrix. You go in there, you do what you got to do, you'll leverage the matrix, and you get out, right? Because you can still be operating as private and administer the trust and leverage the benefits of the trust, right? But at the end of the day, when they're going through and you're doing credit card applications, they tell you you're denied. It's because at the end of the day, what they're saying is, we don't know if you're going to be able to pay us the interest for the entire time. Guys, you apply for a 30-year mortgage, they're making interest on you for 30 years. That's how they get paid. The banks get paid off of an interest. They don't get paid off because they're the middleman, right? Think about it like you're pretend you're a drug dealer, right? You got the connect, and then you got the supplier, and then you got the lead honcho, right? And you got the middleman, right? The middleman is the one who's collecting, right, the profits at the end, but he needs both of them to have it together in order for him to collect profits, right? If they don't have it together, he's not going to make any money. If they're not always delivering on the product every single month, then how is he going to consistently make money? So what the banks are doing is they're looking at these, you're the honchos. You guys are the head honchos. They look at the head honchos and they're like, oh man, that he doesn't look like he has history. He doesn't have age. He's never applied for a credit card. I don't know if I feel comfortable producing this transaction or providing this transaction for the simple fact that I may not get that interest payment on them. So who do they go for? They go for the people who can make interest payments for a long periods of time. And how you can show them you can make interest payments for long periods of time is to have your credit built, to have the age, right? All these metrics that I teach you guys, right? All these five metrics that I teach you, that's what they're using as an excuse that you, as the original creditor, don't have to get access to your credit. Because if you don't hit these, remember, these banks thought about this. They're like, how do we determine if this person is high risk or low risk? They just put these together, bro. They put these together and then they use them as deciding factors that in order for you to be eligible to get access to your own credit, you have to meet those requirements. But that's how they're able to filter out who's going to pay them interest for the long periods of time. That's why they give credit to the people who are good at managing debt. And they want to only work with people who are good at managing debt because they're going to make the most money off of them. If you're not good at managing debt, but you can get access to credit anytime, they never make interest on you because let's say you do go and you keep defaulting, right? That's how they're perceiving it. They're going to be like, oh, you keep defaulting. I'm not making any interest off him for a long period of time. So their goal is to get more interest rates. And this is how the credit game works, guys. Like when you think about it in all hindsight, when you look back at it, from a bird's eye view, and you're just like, yo, how's this really all working out? Because they're denying me on my own credit. That's why they put this whole system together to determine who they can make the most money off. And they're gonna make the most money off the people who pay on time and the ones who don't default, who don't actually who have history, who can get approved for more cars, who can manage more debt. They put these together for them. They didn't put it together for you. None of this information benefits you. This benefits them. But I'm just teaching you guys how the system works, teaching you how the banks, they're all operating. Right? It's crazy. It's crazy stuff when you think about it in the bird's eye view. Right? Like they're really taking advantage of the system, and they've been doing this for a while at the highest levels. Right? So that's really like a summary. And like you diving into that question, asking that question, man, it was awesome. That was a really good question. Because not a lot of people run into that issue, right? Because once you've got your credit to like a really good spot, like, right, and I cover that here, guys. Right? You got excellent, you qualify for the best interest rates, you got very good, usually qualify for the best interest. Guys, I methodically put all this information together. Like you guys have to go step by step. Like if you're skipping material, like you're gonna miss like bits and pieces, and you're not gonna really understand what's working and how things are going. Right? Like you're trying to build your credit and you still haven't quite understood how the score breakdown works. You'll never know how to maintain it, right? Because you don't know what went wrong. Right? If you don't understand this, you've taken care of all your payment history, you deleted late payments, you got, good age, your credit mix good, you don't have hard inquiries, but you don't know that you're using all your credit, but you're like, why is my score low? It's because you don't understand about utilization. So understanding all these factors is key. Right? So we're gonna get into the next topic, guy, AUs, right? AUs is huge when you're going for adding history, right? Primary builders. So we talked a lot about building on the personal side, guys. Like you're building credit on the personal side. And because you're building on the personal side, you're giving yourself the opportunity to unlock business funding. This is why we focus so much more on the personal. And I haven't really talked too much about business because you need the personal to get into the business for the simple fact that if you don't have a business established for at least 2 years and have tax returns for those 2 years, you're not really going to qualify for any like business credit cards or lines of credit without your personal credit. Like it's just not happening. If you want to go the route where, a lot of the internet gurus tell you they're like, "Oh, well, you can apply with a no PG." I'm like, "Bro, a lot of people they just started businesses. A lot of people are new business owners and a lot of people when they start businesses struggle because they don't have capital." So, the chances of people having that capital and also the revenue and the taxes for a 2 year time span on their business, it's very low, guys. Right? You have to be really good at business. So we go through the personal route, right? In order to go without a personal guarantee, you need, like I said, have 2 years of business taxes, and you also need to have revenue in your business. That's how you go without using any credit on your personal side. Like you could just use your EIN. All right. So we're gonna dive into where to acquire trade lines. So these are places that I have vetted myself and I have been leveraging, right? Again, I wouldn't share anything I haven't worked with, guys, right? I really like, I'm big on my reputation. So I'm going to share stuff that I have only worked with, right? And a lot of you are probably familiar with this stuff too. Um, Now, I will say this these companies, they're a little bit pricey, but they're very reliable, very professional, and they deliver. Like that's the number one most important thing, right? If you guys go out and you start looking for trade lines on the internet, bro, I studied trade lines for a couple months and it's like straight, and I found so many scam websites that looked legit. It's unbelievable. Like I'm just being honest with you guys. There's so many trade line websites out there. You go on Google right now, type in trade lines, and there's going to be a ton of companies. And a lot of those companies are not legit, guys. And when you ever try to outsource and look for trade lines somewhere else, I promise you guys, do your research because you end up losing some money. They'll smoke you, you know? But this is actually one I'm using right now. Tradeline Works, right? Tradeline Works is dope. I like Tradeline Works. Why? Because when you guys are using Tradeline Works, they're very legit. Why? Because they're actually going to ask you to send over your credit report so they can look at it to help you determine if you're going to be making the right decision spending money on trade line. Why? Because they care about their reviews because it makes no sense for you to apply for a trade line when you got late payments on your credit. They're going to be checking for that because they're going to tell you, hey, you realize you got late payments. We don't recommend you getting this because the last thing they need is a review that our trade lines didn't work when your credit was bad. Of course, the trade line didn't work. You had negative items. So they actually help you with the credit analysis. You go through, do a credit analysis. You can even use this chat and they get back to you pretty quick. Set up a call with them. Very professional. Like they're super professional. Um, it's to the point where that you can literally get a phone number to text one of the agents and you can text back and forth periodically, especially like around when they're working and you can basically gather more information on types of trade lines. They can even give you updates on specifically which ones may be coming available in the future. But if you take a look at this, you can pay monthly, right? There's an option for you to do monthly, but they offer you a discount if you do a 3 month commitment, right? Now, when you look at the prices of trade lines, anytime you're buying a trade line, the price is going to be based off of the age and the limit. So the higher the age, the higher the limit, the more pricier it's going to be. So if you're not looking for anything too crazy, you're just looking to add some history, but not a high limit, you're going to get a decent age for a decent price, right? And I'm going to give you a couple examples. So let me filter it out by lowest price. I believe they start at 275. Yep. So 275, right? You got 275 per month. You do it for 1 month, you can add 3 years and a 5K limit on your account, right? It tells you when it reports by. So it reports by the 25th and the 4th. So today is March 9th. So if you buy it right now, it'll show up on your credit report between the 25th and the 4th. That makes sense? So that's what the report by date is. All right. And in order to figure out what the estimated credit limit increase is, when you click on this, there's actually a feature that they actually could that you call them. If you call them, that you can go through it and they'll help you. They'll walk you through how to use their feature. There is a feature you can use without having to pay, and it'll basically you'll upload your credit karma. Like you'll upload screenshots of your credit karma, and it will take the info on your credit karma, and then it will basically analyze which trade lines based off of your credit on credit karma and your history are going to make the most sense for you, which I think is dope, right? It's very efficient, and it's easy to use, and you can get some pretty decent sized trade lines here, right? And you'll also, like I said, notice that some of them are going to go on discount, right? So, um, as we go up, you see like this one was 850, you went to 755. Usually the closer it approaches the end date, right? This one's April 18th. The closer it approaches like the end date, the cheaper some of them get. But also these trade lines come and go quick. So you go on here tomorrow, some of these trade lines are going to be here. So it really just depends on where you're at and how long you're looking to get, how soon you're looking to get started. But the key here is just understanding how all this works. So this is why I recommend this particular place is because they're super professional. They get straight to the point. They're not gonna let you get into this and make the wrong decision. That's one thing I really liked about them. So I got no negative experiences with Tradeline Works. Tradeline Supply is also pretty decent. Right? They're also pretty decent. Their price ranges are anywhere from 300 to 1700. And it's for 2 months. They report for 60 days. So they'll be on your credit for 60 days. Uh, you make the payment up front. So, like I said, you'll see the higher limit cards have the highest like age and history. You're going to be around the 1700 mark. But if you're getting like 2, 3 years of age with a 5K or a 6K limit, you pay like $300, right? $400, and report for 60 days. And then these are just the links where you guys can click on and shop around if you guys are interested in them. And then Superior is also good. It's the third option because it's a little bit pricey. It's pricier than this particular one. All right. I personally think it's too pricey, but they still offer a good service, so that's why I recommended them, because they're decent. And then I have a couple direct suppliers, but they're usually unavailable because their prices are so good. Their prices are so good that you usually just don't have much available. Being honest with you guys, but you guys can reach out, and if they have any available, I'll let you know. But for the most part, even though their prices are good, uh, they usually just they don't have that many available, right? But these are a lot of the clients we've had. They've gotten a lot of good results with trade lines, um, and 160 point increase, like that's the type of impact a trade line will have, right? Like she woke up to 151 score bump, right? Like you're gonna see a lot of impact when it comes to adding trade lines, especially if you don't have age. The age will definitely boost you up. But that's where to acquire trade lines. And like I said, again, trade lines are authorized users. So authorized users again are good for just age. They're not gonna give you that depth and that authority that you would have if you have a primary, right? Those primaries I was showing you earlier, right? These guys. These guys are going to give you more depth. The authorized users are more of like, hey, I want my score to look real good, and I'm gonna add the primaries, all together. So ideally, before you go apply for funding, you want at least one authorized user. Two would be optimal, but one is okay. And then you want, at least 5 to 6 trade lines, um, specifically these credit builders. You want 5 to 6 trade lines, these credit builders, on your credit report to give you optimal results for those of you who are new. But if you have been in the game, you're just fixing your credit, but you still have like an auto loan, you've got a mortgage, or you got some installments you're still paying down, you've got a couple other accounts, you only may need to only add one or two, right? You don't need to go and add another five. Obviously, the more the merrier, but if you already have depth, if you already have primaries, right? Remember, primaries are key. I'm always going to preach that. Primaries are key to getting you those high limit approvals. The authorized users are just there to boost the credit in the end, right? And then you have net 30s for business credit, right? If you want to build business credit, these are really good net 30 primaries that you could add on your business. This is just business credit, all right? And really, when it comes to business credit, like you got things like Uline, all you're doing is you would set up an account with Uline, like you'll set up an account with Uline, you would give them all your information, then they would give you a line of credit for your business. And let's say you have an office at home, then purchase supplies here. So, for example, let's say you want to get credit for making a payment, go through, order some shipping supplies, right? Let's say you got an online e-commerce store, order some tape, use the Uline account, and then make payments on what you spent. Now it's reporting payments on your business, right? So you'll just order stuff that you need. Ideally, this is for major corporations, but I recommend people to get at least 3 to 4 of these, right? When they're looking to build business credit, right? I got the top 5 that I currently use here, right? Quill, Granger, Uline, Nav. Nav is actually my favorite. And then Credit Strong, like I was telling you before. All right. So these are like my personal top 5 I'm using. There's a bunch of different options. You guys can click on the websites, look through them. I give you guys all the links so you guys can kind of dive deep into that stuff for yourself. But for the most part, if you're getting into the business credit side, again, I'm going to post topics in the campus every week covering certain aspects, right? If I see you guys are voting for specific topics, I'll include them in the following week, right? So if you take a look at this week's results, credit building was a huge topic, right? And tomorrow we'll be going over status correction and then how to start a credit repair business, right? But we had a couple here for secondary bureau disputes, liquidating cash to credit, credit to cash, and then starting Airbnb business, right? Like these ones, guys, I added to the list for the following week so you guys can go back and get another opportunity to hit those again. But I'm going based off of majority vote. And like if majority of you guys want to learn more about business funding, you want to learn more about, trade lines, whatever that may be, don't hesitate, man. Like at the end of the day, a lot of you are new, a lot of you have been here for some time, and you're obviously on different journeys at different times. So the goal here is for you guys to like get the most value out of this. But I just need to know what you guys need, right? So that pretty much sums it up for the trade lines, and it pretty much sums it up for authorized users, guys, and primaries. Because ultimately, if you guys are looking to build your credit, there's no magic formula. You just have to leverage these tools that I've shared with you guys that are very underrated, super underrated, right? Especially grow credit. I mean, I know a bunch of you guys probably have at least 3 accounts that you're using that you can add into grow credit, and you're only paying an additional $10. That's it. You can put up to $150 worth of bills on that card. Oh, absolutely. Credit card stacking. Absolutely. We go over credit card stacking. Um, right? So if you guys already have access to it, you guys can start. I recommend starting to look through here because I have the business funding sequence. This is credit card stacking. This is exactly that. This business funding pre-funding sequence is credit card stacking, strategically going to certain banks and following certain protocols so that you get access to it and in a very specific order, right? So you got round one, right? And I can go back into this. Absolutely. I'll set up like another class where we can dive deeper and deeper into it. But guys, a lot of this stuff requires also application. Go ahead, Emmanuel.
Yeah, I was doing a secondary bureau. Well, I'm in the process of doing that. Just waiting on some letters to come back. But moving forward, I'm locked out of my experience account.
Yeah.
So even though I can get into my TransUnion and my Equifax, is it possible I can dispute Experian through the mail, even though I'm doing an online dispute with them?
How are you locked out? Like what happened? Did you already call them?
I've tried to get in contact with them, but they don't actually have a physical person I can talk to every time I, go through the numbers they give me.
I listen, the numbers they give you are bogus. Here, follow me here. Go right here into the campus. I give you guys all the best info. So go here into the FTC section, and you're gonna go right to the phone script. You see here the Equifax Experian TransUnion phone script. Guys, you
Yeah.
use these numbers right here, right? You don't need to ask for the fraud department because you're just gonna ask to speak to a rep. Um, but speak to a rep and tell them about your situation. But for Equifax, Experian, you call this number here and you press two. You don't need to ask for fraud department, just press two. And then they'll take
Okay.
you to a customer service rep. You'll talk to a human in 2 seconds.
Okay.
Right.
Thank you for that. I appreciate it.
Yeah, for sure. Guys, there's always a solution. And if you have like you run into that problem, just drop it right here in this Q&A tab. Like, hey, locked out of my report. Like, how can I get in contact with them? I'm gonna point you guys in the right direction. But for the most part, yeah, you can literally just call them with those numbers. If you guys Google any other numbers when it comes to credit stuff, you're gonna be talking to a machine for hours. I'm sure you guys have probably already experienced that, but yeah, you're gonna be talking to a machine for hours. And then I actually got this number here. You call this if you want to get in touch with TransUnion, and you can go directly to a supervisor. Ask them to talk to a supervisor using this number. That was a good question. That was a good question. Anything else, guys? Anyone have
Uh,
questions?
Question.
Absolutely.
I know we're gonna later go on the how to start like a credit repair business. But I do already have one. But I was just wanting to get feedback. Do you have any suggestions for like pricing structures? Like when it comes to pricing credit repair packages?
Absolutely. It's the game changer. I was doing that for 2 years. If you don't have a solid pricing strategy and the psychology isn't behind it, you're gonna get a lot of rejections. Like I'll share my personal pricing strategy for my credit repair business, right? That you guys are leveraging. Like people are paying me, 1,500 bucks to fix their credit with the same processes I'm teaching you guys, right? My team executes the same things I'm teaching you. But if you go down to the done for you service, this is how I structure my pricing. And I keep it simple. We only have two packages, right? I offer a cheaper price if they pay one time, and then if they finance it, it's 900 for a 6 month commitment, right? So it's gonna cost them more to break it down to monthly payments. For me personally, as a business owner, I get 6 months worth of payments, right? So for every client, I'll have 6 months of income plus, and if they want to make a one-time payment, I'll have all that money up front, and they get a benefit from it, right? That's the standard package. But then there's the express package, right? Where we get more aggressive, we get on the phone calls, right? Standard, we don't actually call the bureaus and like challenge them as well. For express, like our team is getting on the phone and we're like literally like same day trying to get it off, right? We're going the fastest route possible. You can go the dispute route, wait every 4 or 5 days, resubmit disputes, but that's standard. We go through express where, you're gonna be paying one time 1,200 and then finance is 15, right? So that's how I structured it. And when I tell the clients that price, right, it's all based off of how quick they'll get the results, right? We commit that 30 to 60 days or less. That's the time frame we give them, even though we know we can get it done in less than 30 days. I mean, we get our clients' results in like 2 weeks, right? So You guys see it in the campus. At the end of the day, we give them this date and then we over deliver, and now I'm getting more clients, right? So there's strategy behind it. So it really just comes down to keeping it one short, simple, and then two, if there's only a $300 difference, right? When it comes to, so because this particular one, this program, even though it's double the price, they're gonna get the results double in double the time and as fast as and double the speed, right? So to them, they always want to do express. Like a lot of my sales are express because they love the speed. So you're gonna end up bringing more revenue, especially when they're on a 300 a month commit, right? They're going and they're doing monthly payments of 300. That's decent revenue coming in every month. You know, you get 10 clients, you got 3K a month consistently. You just have to keep building on that, right? So yeah, pricing strategy is huge.
And for the $600 plan, like the standard plan, does that include 6 months of like credit repair, or how long is the program if someone purchased like your standard six
So
hundred
our
dollars?
standard, we give them 2 to 4 months.
2 to 4 months. Okay, okay.
Yeah, 2 to 4 months. We don't take that long with people's credit, guys. We turn people quick. Like we don't want to hold anyone because our next step is to get them funded, right? And
Right.
because we know what we know, you guys can leverage this information. That's why, you guys are learning this stuff because you guys can change your family's life, you change your relatives' life, you can start a business, you can make money off of this. That's the whole point of this information, is because all these companies charging $2,000, $3,000, they're doing part of what we're doing, but we're just doing different methods that are even better as well, right? But you're getting the opportunity to know it, learn it, and apply it and leverage it. That's the key.
Thank you.
Absolutely. Any other questions, guys? Awesome. Yeah, tomorrow, guys, status correction. We're diving deep into status correction. That's a big one. I'm be basically going over specifically how to start from beginning to end, like literally all the documents you need, or what steps you need to go through. And then my goal is I'm going to be going through and structuring it so that you guys can have like some sort of like a checklist. You know what I'm saying? You guys can have some sort of like a checklist that goes step by step by step so that you can check it off as you go and you're like, all right, I'm here. You guys, instead of being confused and wondering like, okay, what do I do next now that I have a trust, or now that I've completed this, you guys will have a checklist that I'll walk you through everything you need. And then I'm going to be providing you guys with the examples of each step so that you guys can go through and follow it as you go. But I also am going to be including the information you guys need to read, because you do have to read a lot of this stuff, guys. Right? When I tell you guys you got to go through the campus and read the material, I've simplified it as much as possible, but you still need to know the stuff. You can't cheat it. You can't cheat the reps, right? I can't be trying to build a chest and I'm not doing the push-ups every day consistently, right? I got to do the push-ups every day. You do the push-ups every day, your chest will grow, right? You trying to build your arms, same thing. You got to curl the muscles every day. You got to curl the dumbbells. You can't cheat the reps. You got to keep hitting it every single day. You got to go into the campus, review the material, and it'll sink in. I've taken the opportunity to simplify it for you so you guys aren't deciphering legalese, right? Because I have to read everything like 5 to 10 times for me to comprehend it. The way I can explain it to you, guys, I've gone over the material like 5 to 10 times at least. That's why I can recite some of these laws and I know what everything means, because I've dissected it in and out so that I can make it easy. It seems easy when you're going through the campus, but the moment you guys start reading through the material, it's a whole nother ball game. But yeah, tomorrow we're diving deep. Excited to have you guys here. Look forward to seeing everything you guys are gonna accomplish. I know a couple of you guys have been literally recently just joined, so welcome, and also congrats on a lot of you getting results already in the credit space specifically. And it's just a matter of time for you guys to start seeing it in all the other aspects. You just have to trust the process, and speed is the key. You gotta execute every single day. Speed is the key, especially with the credit stuff. You want to get results fast, you gotta work fast. That's the ticket. You wait a couple days, you're delaying it a couple days. You wait a week, you just delayed it a week. All right. Well, I'm gonna let you guys go. Um, Great class. Have no credit. Absolutely, yeah. So let's get to work, guys. You guys have any questions? Drop it in the chat in school. I do my best to get back to you guys ASAP. And we'll go from there. You guys enjoy the rest of your night. I'll see you guys tomorrow.
Thank you.
Peace and love. Take care.
Good night.
Night.